Hi, everybody. This is Gary Dean with Sentiment Timing, and this is our technical video report for Tuesday, December 20th, 2022. So the Bulls were able to break a four-day losing streak, not by much. They were once we came down and tested these lows again. You can see we made a little bit of an extra low on it, and this was actually one of the pivots. You can see the right here, the 37.98. So we made it right here. This was one of my targets. And then from there, we saw a buyer step in. So I think the S&P was down somewhere, something close to like 15 or 16 points. And if you used it, to be buying dips on it, it was a good call on that. I got it a little bit above at the 3,800 yesterday, so I didn't add to it. But right now, if the Bulls can get above this 38, 37, or the highs that we made today, we should see a reaction trade anywhere up into the 38.57, or possibly up to the 38.64. And the pattern that I'm looking at is, it's actually this inverted head and shoulders pattern that we've seen a lot of these lows actually made from. So here, I'm going to just give you where it is. Here's your head. Duplicate that oval, and here with this. So the way that this pattern would play out would be that we either we get a move up to these levels and then come back down to the 38.30, 38.40 to make the right shoulder. So it'd be up, down, and then up again. So if this does play out, depending on where it is, let's just say the 38.57, the head would be down at 3800. So it's not a huge move off of here, but it's still looking for a move to get us somewhere into the 3900 level. And if that happens, then they're going to be breaking above, some of these resistance, and we could see probably at a bare minimum this gap closed, or like I've been saying, there's a shot that they are going to come up and try to close this 4,200. But right now, everybody is really bearish on this market. Woody's going to be putting out some dates. He's looking them over right now. But we have, as far as from a technical view, here you can see we have bullish divergences that are really starting to form. Everybody's bearish on this market. Seasonality is bullish. So I think that anybody that's looking really to short this market, unless something goes off geopolitically, I think you're going to see them chasing their tails, and the ones chasing their tails are the ones that were jumping on the Santa sled here with the CPI numbers. They got washed out, so now every bounce we get here, they're going to be shorting it, and then they're going to be used as short fuel, and we'll see a move back up somewhere into these levels. So that's pretty much it. Now let's look at option two here and say that the bears are not done yet, and they need a little more downward action. Then we're just going to start keeping an eye on our other pivots, and this is why I layer in positions. Is because when we get into these levels here, it should hold support, but if it doesn't, then you layer in another one. If that doesn't hold, then we're going to layer in the third. So we should be layered in pretty much right near our second entry. So if we're here, we're going to be fully loaded, and then from there, that's when you start making some good money. And like I said, the Dow being up today, pretty good. It's telling me some money's flowing in from overseas right now. The fact that the Nasdaq is just really having a very hard time getting out of its own way. That's the retail traders that are giving up on the Santa, and then the S&P is more in your hedge funds and stuff like that. So it's usually right in the middle. But I'm still on the side of we are going to get a Santa rally. That will be setting up the larger swing trade, which would be to the downside, and I think there's going to be a ton of money to be made on it, but I also think that there's going to be a decent amount of money to be made with this. And I'm going to show you because I took a screenshot of when we were trading down at one of the pivots on the with the futures we're doing. And here you can see. So I pulled up. This is when the spiders was trading at the 378.40, and I'm looking at the 388 calls on it. So from there, it's 10 points up. But I'm also giving it till January 6th. So this was my trigger on it. And now if we turn around and just look at where we are with these options now, I think it will give you a pretty good idea as far as of what's happening. So they're 323. So now if we sit there and we get that move that goes up to let's say where I believe it's going to be, and at a bare minimum, it's going to be somewhere at the 39.40, 39.60 level. We're going to be it's going to be almost $8 in the money on that. So this is where you can make money with options, and the thing is that if you don't trade options, then you can just use the SSO and the SDS. So this was, we had a little bit of a bounce today on it, but if we look at the, what's been playing out here, these are enormous moves. So being that we're, one of the best market timers out there, it's not that hard to make consistent gains on this. So I still, the door's open on whether we made the low or not. I'm buying dips on this, and I think anybody that's going to be shorting it will be sorry. But with that, let's see what plays out tomorrow. Have a great night, and I'll talk to you guys in the morning.